I've been meaning to make a video, but you know I have the fucking most ghetto setup on the whole entire universe. But here goes nothing. So we're gonna do a recap of yesterday's trade. Oh my fucking god, I'm gonna flip, bro. Today is not my day, bro. Holy fuck, bro. It's like this universe is just trying to fucking push my buttons. Alright, so we're gonna go back to 9:30 because this is what basically our model is. So up until 9:30, we're pretty much just analyzing the charts, seeing what price is doing. We always like to start on the higher time frame if we don't know what price is wanting to do. So when we take a look at the higher time frame, we're moving bullish, right? We have this swing high up here, price is heading towards it. And as we know, price targets liquidity. What is liquidity? The last series, it's basically a swing high or swing low. Swing low. These are your swing points. So either a new high or a new low, old high or old low. So on the higher time frame, this is a pool of liquidity. This is buy side. On the higher time frame. Now this isn't just going to reach up here in one session. It could. But you have to take in mind a daily candle takes 24 hours to print. So in this price action is where you want to look inside, looking for an entry. And then you already have a bias of bullish. So that is where you want to start looking for longs when price is trading in a retracement, essentially. So the first things first is developing your narrative on the higher time frame. On the daily, we have this fair value gap that we are trading above. We closed above, and now we're trading back into it. When you drop down to the next time frame, this whole area is a fair value gap. So we marked up this wick. And then you drop down again. Same area. So we know this is an area of inefficient price. We know price is likely targeting that area. And then buy side. We can see yesterday during CPI, right as that released, it reached all the way up here into that fair value gap. Was that a coincidence? No, it wasn't. We reached up into that fair value gap. So now we drop lower. So what do we have? Right now, this current time, right? We reached up into that fair value gap. We also cleared buy side. So at this point in time is a great time to start looking for shorts. Why? Because what happens when you run highs? Price goes the other way. And that's basically our model. Are we running sell side first or buy side first? Right now, on this day, we ran buy side. So we're basically waiting for 9:30 to see how price is printing. Right now, this is what we're looking at 9:30. We reached up here. Failure to close above. This is also a manipulation. And this would be your change in the state. So now at 9:30, we are potentially bearish. We're looking for shorts on the 9:30 open, aiming for this wick right here, either 50% or the whole wick fill. Boom, price opens like that. I entered on the 15 seconds, so I can't really show you, but I entered up in here. I could probably go on my trading platform and show you. I have to pay for, you have to pay for the 15-second on TradingView. Excuse me. Oh, fuck me, bro. I know this shit is all the way the fuck back here. Okay. Well, I wish I could reset. So this is that 1 minute candle that displaced lower. Up in here is where I kind of wanted to look for a short. I noticed we were trading off of this. And then we just, like, as price was like ticking up into here, I'm like, yo, go short, go short, go short. I'm like, no, we can't. I, like, literally, like, right hand to God, I put this on my life. If I'm lying, I'm dying. Price was ticking up into here, and as I'm watching it tick up into here, I'm like, yo, this is a perfect short opportunity. But what stopped me from doing that was that this bullish candle right here. But that doesn't matter. It really don't. Because we still didn't shift structure. Looking back, we didn't really shift structure yet. Because this is a swing, this is this, and then this is a newer low, and we failed to create a newer high. And also we failed to create a newer low. So now we're trading inside this range. This is what I failed to notice. And then we start trading sell side. Trading back up into fair value gap. If bearish, bearish, fair value gaps hold. If bullish, price would have traded through. And that is where you want to look for a long when price do I got the arrow tool? We do. So if we were bear or bullish, we would have wanted this blue candle to close above this fair value gap. When this blue candle closed above this fair value gap is when you want to look for price to trade back into here. And that is when you would have went long, aiming for buy side. So pretty much your job at 9:30 is to detect if price is manipulating or getting ready to distribute, and which way is it targeting. That is the trickiest part to, like, develop a bias. So after this, we missed our first entry and then displaced, and we can, fuck, bro, I wish there was a replay setting. So we missed our first entry, and then this is that 1 minute displacement candle I showed you on TradingView. Then we create a fair value gap. So I can actually show you that on TradingView. So we created this fair value gap. I'm like, all right, we have displacement lower and a fair value gap. If we're bearish, we want this fair value gap to hold. I entered short in here. Hello? Oh yeah, I forgot. I didn't start shorting. I know early trader me would have just went short right here. But I told myself I'm going to wait for price to trade back into this fair value gap. And when it does is when I click short. So essentially this was our short opportunity up in here, but we missed it. See right now price is filling in this giant fair value gap, that CPI candle. This is inefficient price. We went short right here. So pause, pause, pause. Now, what was our thesis? We kind of set our stops a little bit above here, like floated it. What is our thought process? Well, basically, if price is bearish, this fair value gap has to hold. So we know that we don't want price to come up here. If it does, then we know we're automatically wrong. So you can set a tight stop loss. If there was more fair value gaps, then you're not too sure if price is going to trade up into here or up into this one, so you have to change your risk and set your stop accordingly. That I was able to set right there. And then let me show you where I went wrong here. I set my take profit at the bottom of this wick. Dude, you're a fucking whore. That's not what happened. That's not what fucking happened. We have different price action on here. That's another thing. Different brokers have different price, like different, like the chart is like different. So right here, I set my stop losses like I fucking don't like doing this. Yeah. Yeah. See, so you can see. So this is actually where I went short. I didn't on here you can't see that because the candles. Because we're looking at 15-second candles, so we're looking inside these 1-minute candles. I can't do that over here. So we are trading inside this fair value gap. I'm like, all right, if we close above, we're probably bullish. Boom, displaced out of it. This is the swing that made the new high. So this is your swing point, and we close below it. That is your shift in the state. We start trading back into it. This area is inefficient price. You can see we have a fair value gap right here, fair value gap right here, fair value gap right here. So this whole area right here, pay attention to the price chart over here. This whole price level was inefficient price. And we're trading in here. We're trading up right now. So on this candle is when I went short. I'm like, okay, we have all of these. Price is likely going to target sell side now. So I entered short right here on this candle. That candle would have been inside this candle, this bearish candle on TradingView. Like literally the printing of the starting of this candle is when I entered. Entered short. Oh, wrong tool. Entered short. And I set my stop loss like floating above the fair value gap. That's what I meant to say. Now, let me show you where I went wrong. When you scroll over, I set my take profit down here. And you can see price never hit it. And I told myself I'm just going to hold it, take profit, or let it stop me out. And I trailed my stop loss. And we were like down here, you can see this triangle that's showing that price closed the trade. So my stop loss was like right here, and I got stopped out. But you can initially see that price we analyzing. If you analyze right, do everything I showed you, you can get on the right side of the trade. And if you learn how to read the candlesticks, so this was our sell side. This was our initial target. Didn't hit it. Or we could have partialed. I almost took a partial right here on this blue candle. I'm like, okay, you ran sell side. now's a good time to partial, but I didn't. I told myself I'm just going to hold the trade and got stopped out. And then I went long somewhere right here. See this green triangle? I went long inside this fair value gap right here. Why did I do that? Because now we closed above this swing, right? This is your swing. We have a new low. You really have to pay attention to the candles, but you don't want to get too focused in. So when you look, we're in bearish price delivery. So we have a swing low, lower high, lower low, lower high, lower low, right? This candle closed below this one, so this is a lower low, lower high, failure swing, right? We didn't close below. So now we're inside of this price range. Close down. So this is our swing point. Either this or this is where you want to look for a shift in the state. Or even this one. This is a more better one actually. Because this is a bullish candle closed below. Wicked up, so made a new swing low. And now we close above. Now we're trading higher. Still letting price print. You run some sell side, wipe out liquidity, displace, higher. Still didn't close below the shift in the state. Some more context, the price is now running buy side. And then we are presented this fair value gap. Started trading higher. I'm like, all right, I'm going to enter long inside this fair value gap. And this is where patience is key, but management is also very important. Because you're not always, you can't time the market 100%, right? You're not going to always get the perfect entry. So you don't know if price is going to tap down here one tick and fly. You don't know if it's going to retrace all the way down here. You don't know. But you do know the price is going to trade back to the fair value gap. And so that's why we entered long right here. But you can see we were a little bit early. And this is why you don't want to get you don't want to overwhelm yourself with trying to get that precise entry, because that's where you're going to mess yourself up. And I did that a lot. I was always like, I would always try to be timing the market to the tick. Like if you're really precise, like you can see this is a fair value gap right here. Now, if you're zoomed out, that does not look like a fair value gap. It looks like the wicks are touching. But when you zoom in, they're not. So this is an imbalanced price right here. And now you can see why price started trading down here to fill in this area. If you drop one lower, there's probably even more down in here why it traded down here. But this is an order block because we made a new low and then we closed above. So this is an order block. Traded to 50%. But yeah, we entered long right here. We kind of set our stop a little bit below. Wherever $50 was monetary value, that's where we set our stop. It was like somewhere in this area. And then initially we're like, all right, we're going to target Asia highs. Because this is previous day high, Asia highs. Then we just let price print. Held. And now it was like 11 a.m. and we got this candle right here, and so I closed the trade. So I'm like, all right, volatility is probably out of the market now. It's 11 o'clock. PM session is going to start doing its thing. So we closed the trade. It was a pretty good trade. So basically what you're doing is you want to see this price right? This price manipulate buy side. Like over here, we ran buy side. Time and price. Time and price is your best friend. From 9:30 a.m. to 11 a.m. is your AM session model window. That is your time window where you can look for a trade because of the volatility in the market. If you're trading NASDAQ, Forex is different. Like Forex starts at like 8 a.m. or something like that. Excuse me. Before you, I want to say this though, before you start getting used to the 15-second, practice getting used to reading price action and dropping down from the higher time frames. So you want to start with either the weekly or the daily. I started with the daily, and as I got more comfortable reading price, I would add more time frames, and that is where you also realize how fractal price is. At first, trying to mix in all these time frames, it gets confusing. But when you learn how to read, you really want to pay attention to candle body closes. That is your indicator of where price is going. So you have swing points. Okay. Now, say we're coming down here and we're trading up here. Oh, fuck you. Now, picture this as your swing where you're looking for a shift in the state. This is where you want to look for. Damn. That's going to be hard to see. Fuck you. Sure, man. Sure. Oh my god. Oh, it's gonna give me an aneurysm. Okay, anyways. This is your swing. This is picture this as a candle body to the left. Okay, we printed closed and now we're trading down. Nigga. What the fuck? I can never record in peace. It's always a fucking. Anyways, this is. Oh my god, it's gonna piss me off. Like, that is not how I had my fucking scroll wheel set up at all. Like, what? Like, the shit just did that by itself. Like, I didn't even click anything. Fuck, I lost track. Anyways, at swing points is where you want to look for that candle body to close either below or above. This is what will tell you if price is going to continue higher. Okay, so say we close below. Now that is where you want to look for a candle, a red candle to close below this one. But if we close above, you want that red candle to not close, right? You want it to be small. So it's all like you really have to pay attention to the candle bodies, but also playing in the swings. And the wicks. Because inefficient price will be your best friend. But you can't go marking up every single inefficient box because that's going to be a headache reading. But you can see you have this fair value gap, and you can see why we left this large wick down here, because we are filling in this whole price leg. Like, this is all inefficient price. Like, you could sit here and mark up all these fair value gaps, but you're not going to be able to read the chart. Like, so you just want to keep in mind what price action is doing. Like, here, I'm going to show you. Like, if you sat here and marked up all these fair value gaps, like that's just going to give you a headache. But if you just keep a mental note, like, okay, this area of price is imbalanced. Like, you can either just set a line at the highest fair value gap. You know, price is likely going to target this whole area. What is this area on a higher time frame? It's a wick formation, and then you zoom out, you see that's a wick. Also candy. So this is inside a wick. This is a wick right here. And the higher you go, you'll realize your swings. See, that swing point that you seen on the lower time frame is gone. On the higher, if you're watching price from the 5-minute, you would have missed that long entry that I showed you, because you would have been waiting for price to trade up here. But if you're looking inside a lower time frame, you can see, well, a new swing was printed right there. Why? Because this bearish candle closed below this swing, and this is a swing high. We failed to make a new high, and we closed below. This is your shift. You could have went short right here. So it's just on how do you read price. Stick to one session too. Don't just go looking in every single day for that entry. You'll burn your account quicker than you got it. I promise you that. So going back into that day, you can see why we were wrong. But you can see, look. If I would have did that, we would have hit our take profit. Let me see something real quick. He traded 25% of that wick. That 25%. No, he's basically wiping on the sell side. Oh, that was our target right there. I found you. The smooth bottoms right here was the algorithm's target. Aha, I found you, bitch. Oh, I'm so pissed. Why didn't I see that? Oh, you're such a fucking slut, dude. Why the fuck didn't I see that? As we know, price targets equal highs off rip. Equal highs, equal lows, equal bottoms, whatever. Double tops, double bottoms. Because we know retail is trading off those double bottoms, double tops, right? Double anything is an automatic target. I did not even see this shit when I was trading. I would have set my take profit right here, and you see it would have got smashed. RIP. Hey, look, you see right here? This area is like relatively equal. Like the wicks are like the same area. Look what happens. Clears it out. And that's just on the 1 minute. Like it happens on every time frame. So you can base your trades, right? And like say you have an I had one recently. I know I did. I think it's right here. I think it was right here actually. Somewhere in this area, there was equal highs on the 15-minute. That is where I dropped lower. Okay, I'm not going back. Anyways, that is where I dropped lower and got inside that price action and caught a bigger move. Because I'm targeting those equal highs, but when you drop down lower, you're opening the chart even more to like even more price. So you can basically position yourself on the whole move. It's very like trading is really easy once you learn like don't go down the retail rabbit hole. Getting out of it is really hard. They'll tell you that okay, you just mark up all these swing highs, support and resistance. Do not go down that rabbit hole. I just showed you how to make like look, here, look. I'll show you how to make $200. Quick 200. It'd probably be like 100, but you know, it's all right. Look, see? And how long would that? Let's say 9:40 to in 5 minutes. 5 minutes, you would have locked in $130. Now you go to your 9 to 5, and they're probably paying you what 15, 16 an hour. All right, now let's take now. In an hour, you just made $15 in 60 minutes. You can make 10 times that right here doing what I just showed you in 5 minutes. This is Ace on Forex. If you want to join the free trading group I'm developing, it's MarketMilkers Christian Trading Community. Join the family. I left the link in the bio. Peace out.